Hello traders and welcome to another video review. Today is Friday, August 22nd, 2025. Let's take a look at the economic calendar for today. What do we see? Here are some data from the Asian session. National CPI in line with the expectations or a little better than the expected 3.0%. Nevertheless, the downslide is imminent from 3.3% to 3.1%. We are waiting for the core retail sales and retail sales data from the UK, scheduled for this at 8 o'clock. At the same time, at 8 o'clock, we got the German GDP data. As you can see, deteriorates even faster from minus 0.1% to minus 0.3%. During the US session, we got data from the Canada. Core retail sales and manufacturing sales are scheduled for release at 2:30. And at 4 o'clock, we got the Fed Chair Powell to give a speech. And 2 hours later, at 6 o'clock, we have a speech from US President Trump. Bulk futures oil recount, the total recount data are scheduled for release at 7 o'clock. And that's about it. So quite easy Friday with plenty of data releases, especially two important comments or speeches from the Jerome Powell and Donald Trump later on. So without any further ado, let's switch to the charts. We'll start with euro dollar. For our time frame chart of the euro, the dollar is showing us a breakout below the technical support located at 1.1593 after the 100 periods moving average was violated as well. So what I see here is a downside slide towards the 1.1561, 1.1544 as the next target for the bears. It looks like there is still some room here on the RSI. There is still some room here on the chart, and the market is clearly moving lower as the bears are in charge of this market. And now, if we apply this trend line here to the RSI, so you can see that the market is way below the RSI trend line. No support trend line can be placed here whatsoever. So right now the outlook for the euro dollar remains bearish. Let's take a look at the US dollar versus the Japanese yen after the Japanese data were published, and this time completely our scenario has been completely missed, mostly because this movement here to the downside didn't actually hit this this level of support, 145.87. It was like 50 pips miss. So anyway, what do we have here? We have a breakout above 100 periods moving average. We have a breakout above the technical resistance at 148.05. Now it will be a technical support. We broke above the local swing high at 148.56, which is why we are going to place our line here at the top of this recent move, 148.78. And now, as you can see, we got the situation where the market is again trying to rally higher. Bearish engulfing candlestick pattern is in progress after the market hits the extremely overbought conditions. Most likely this level here will be cleared, and the technical support will be tested very soon. So despite this breakout to the upside, the outlook still remains unclear. Neither bulls nor bears are in charge of this market, and it doesn't actually look like there is any major side that the market picked up already. British pound after the CPI data release is moving lower. We already broke below the 100 periods moving average, 1.3416. The market is about to test 1.3382, 1.3368 technical support. And please notice that because we hit the extremely oversold conditions, we might expect some kind of a pullback to the upside. The nearest technical resistance is 1.34862, 1.3475, so we might see some sort of the upside movement here on the British pound. Let's take a look how much did we actually retrace on this market. So from the lows of the swing to the swing highs, let me just move it here. There you go. We almost retraced 50%. Right, so the level of 1.3370 is 50%, and it looks like the market really wants to test this level, and then a pullback to the upside is expected from this level. Nevertheless, there is still no indication that the bulls are back on the market of the British pound. S&P 500, after the yesterday's data, after the yesterday's situation, keeps moving lower. Local low 6,344, we will treat it as the technical support. Technical resistance located at 6,437 will now be technical resistance. This situation here is no longer valid, and what do we have here is breakout below 100 periods moving average, but the market conditions are almost extremely oversold. So the next immediate important level of interest for the bears is obviously 6,210 and 6,200. Those two levels are, as you can see, the technical support levels. How much did we retrace already? Let's take a look. We retrace 50%. Again, we retrace 50%, so any breakout below this level will be considered bearish. Next target, 61% for Fibonacci retracement located at 6,317, and then eventually even the lows from the August 1st. So right now, if we take a look at the current situation on the S&P 500, it's Friday, so let's take a look at the weekly time frame chart. Look at this. On the weekly, do we have this market here? Oh, there is no weekly time frame. Okay. Let me just go back. S&P 500. So maybe daily. There you go. The daily is on. So if we take a look here, you can see that this weekly candle will be quite Friday, Thursday, Wednesday, Tuesday, Monday. That's the last Friday, right? So this candle looks down on a weekly time frame chart. So quite interesting situation here. All right, let's take a look at the Bitcoin. What is Bitcoin doing? But let's switch to the 4-hour time frame chart. Obviously, we have some kind of a bounce from the extremely oversold conditions from the level of 111,951. So we have a slight bounce. Nevertheless, we are still trapped just below the level of the technical resistance, 114,671, as the market keeps move higher. Nevertheless, it's only a pullback, and if there is a breakout to the downside, we might test the 100 periods moving average, which is located roughly at 111,000, and this is the key level for today. Any breakout lower opens the road to the lows of the June, located at 97,741. So please pay attention to this situation here. It would be beneficial for bulls if they could break above the technical resistance and fly higher, move higher away from the danger zone, away from this level here, because it's completely not beneficial for them. And last but not least, let's take a look at the Ethereum. The Ethereum market wants to move higher. Nevertheless, it still failed. The bulls still failed the moving up game. Okay, so right now, roughly around here, we got this trend line. The pullback went towards the 50 periods. 100 periods moving average, 4,200 59. The market tries to break above this upper channel line. Nevertheless, the momentum is still negative, back to neutral. It's not even a positive momentum, which is why the breakout above 4,370 is so important, and this is why we got this blue arrow here, because the market really needs this level to be cleared in order to fly higher. Otherwise, we might see another reversal lower towards the 4,100, 4,055 level. So please keep an eye on the current situation on the Ethereum. It doesn't actually looks very bullish, because bulls needs a breakout to the upside. So any failure here might have very big consequences in a short term time frames, because we might see another deterioration. Lower 50% has been tested, right? The lows here are 50% of the Fibonacci retracement. 61% is located roughly here, 3,900. So any failure here to break above this level will bring us down towards the 61%, the line of the last resort for the bulls. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.